Welcome back. BlackRock and alternative investing platform YieldStreet announcing a $1 billion actively managed fund for retail investors. Joining us now to tell us more about this partnership, Michael Weisz, president and founder of YieldStreet. Also, of course, on set with us still, Mohammed El-Arian and Karen Firestone. Very good morning to you. Thanks for joining us, Michael. So congrats on this announcement. Sounds very significant. Tell us exactly what this is. It's a new fund that BlackRock is seeding $1 billion into.
Well, thank you, and thank you for having me. So this is a new fund. It's the first of its type for YieldStreet. It's $1 billion or a maximum $1 billion fund for YieldStreet. Part of it's going to be sub-advised by BlackRock and the credit team.
So it's not $1 billion from day one?
Correct.
Okay.
So we're going to roll into that. And the basic, we're confident. And the basic idea is that all the other investments on YieldStreet have been single investments, and people have to build a portfolio over time. But people want to be able to access instant diversification. So much like a prism where one ray of light shines many different shades, similarly, one allocation here in the YieldStreet Prism Fund will give you access to a diversified portfolio. If you think about the portfolio and its construction, where it's going to be partially managed by YieldStreet and YieldStreet type assets, so private and liquid credit across the various asset classes that we've introduced to the market, marine, real estate bridge loans, art finance, legal finance, consumer, et cetera. And part of it's going to be sub-advised by BlackRock's credit team in the global public credit market with some EM there.
So this is to give essentially retail investors access to some other different asset classes or liquid investments they typically wouldn't have access to in order to give them a sort of a higher yield than perhaps you're getting in S&P 500.
I think our core focus at YieldStreet is, and our mission at YieldStreet is, how do we help create financial independence for millions of people? And you do that by helping people generate consistent passive income. So our focus at the YieldStreet Prism Fund is an income generation fund. And that's really what we're looking to do, and to take advantage of the credit team that BlackRock has globally, so New York, Singapore, and the UK, and YieldStreet's private credit team.
So I can see how BlackRock, and I'm going to simplify, provides the liquid part of the portfolio. YieldStreet provides the illiquid part of the portfolio, and then you put it together and reach many other people who otherwise wouldn't have access to the illiquid part of the portfolio in a vehicle that they understand. That I get. What happens if, God forbid, we hit a liquidity pothole? What will you tell your customers about what it looks like if suddenly ample and predictable liquidity, that changes?
So I think it's a great topic. It's something we're super passionate about, which is really investor education. What is the price for liquidity? Is it priced appropriately? We believe it's not. We believe that retail especially makes decisions based on fear. If you look at the last couple of cycles, retail does not participate in the value creation during those cycles. They're generally on the other side of that trade. They sell too quickly. At YieldStreet and at the YieldStreet Prism Fund, it isn't going to be a highly liquid fund. Only after the first year can you get quarterly redemptions based on the fund's management and the board. So we believe that if we educate our investors the right way to understand what the investments are and its income generation nature, that we shouldn't be affected by short-term price volatility. I mean, you look at today, the Dow was down before I came in here, 170 points. That volatility is difficult for retail to deal with. On the whole, it's been up, and it's been a great bull run for the market. But we believe that retail investors want to find a way to generate consistent passive income as opposed to having that sort of palpitations in their heart where they're moving up and down.
To what extent do you acknowledge what some people might say, which is that this kind of marks the peak of very low yields for treasuries and similar bonds, and there's only demand for this because retail investors are desperate for that just small little yield pickup, and if rates went the other way, you'd suffer?
So I don't think that the entire statement is accurate. I'm known for saying winter is coming. I say that to a lot of people all the time. I think we have to think about that. I think we have to prepare for that, and what does that mean? Also, the indicators in the market seem to be strong. But with regards to retail, there's a much different story that's going on here that people aren't paying as much attention to. So if you look at an investor's life from 18 to 80, let's say, we start out our first bunch of years riddled in debt. So we have student debt, we have housing debt, we have credit card debt, et cetera. Only in our 30s do we enter into some sort of stability. But now most of our money is invested in ETFs, in equities, in our IRAs, et cetera. Only 10% of people roughly ever end up in alternatives, and they're usually at the ages of 60 or above. YieldStreet's customers' average age is 42. We're bringing back the curtain by over 23 years. What does income generation for 23 years look like? I think that, yes, the story is happening now because of technology, because of regulation, 506C and general solicitation, because data has matured and allowed us to find people cost effectively. But the reality is people don't have access to consistent passive income. And YieldStreet and other companies are doing their best to try and change that.